Welcome to the weekly market wrap-up. I'm Hannah Bernard. Markets were hit this week as fighting broke out in Iraq and Sunni militants captured the nation's second largest city. The turmoil is weighing heavy on investor sentiment and also causing the price of oil to move higher. How bad was the market retreat? Let's find out. U.S. markets began the week challenging record highs, but stocks started falling on Wednesday. On Thursday, the Dow Jones Industrial Average tumbled 109 points, losing 0.65% in value to close at 16,734. The S&P 500 took a similar hit, losing 0.71% in overall value, down nearly 14 points to close at 1,930. And the Nasdaq had the biggest drop, losing 0.79% in value, down 34 points to close at 4,297. Now let's turn to Canadian markets. The TSX hit 6-year highs this week and despite geopolitical pressures managed to hang on to gains, closing up 17.50 points on Thursday to 14,909. The TSX Venture Exchange also weathered the storm, closing up 8.77 points on Thursday to 997. Escalating tensions in Iraq spilled over to energy markets again Thursday, pushing crude oil prices to 8th-month highs and setting the stage for stubbornly higher gasoline prices to rise even more in North America. Sunni militants widened their grip on oil-rich northern Iraq and threatened to take control of the south as well, where much of the nation's daily 3.4 million barrel output is refined. Iraqi oil production has already been cut by about 300,000 barrels a day since March. A barrel of benchmark West Texas crude oil soared above $100, rising 3.64% on Thursday to $106.53. This move played a key role in this week's market retreat. We are also seeing the rise in oil prices contributing to falling airline stocks, with Air Canada down 9.85%, WestJet down 1.52%, American Airlines down 7.4%, Delta down 6%, and JetBlue down 5%. Markets also retreated this week after the World Bank lowered its global economic outlook. The World Bank said late Tuesday that it expects the world economy to grow 2.8% this year, instead of the 3.2% it predicted in January. A World Bank report cites the rough winter in the U.S., Ukraine unrest, economic rebalancing in China, and economic unrest in other trouble spots as factors contributing to the lowered outlook. The bank expects a third straight year of growth under 5% for developing countries as a whole. And now to winners and losers and our picks for the week. The winner for this week is Lands' End Inc., ticker symbol LE. Shares soared 8.19% Thursday after the outerwear maker reported strong earnings in its first report since going public. Q1 EPS jumped 48% to 34 cents per share, with revenue climbing 3.6% to just over $330 million. The strong results came during a quarter of weak winter sales for most retailers. Lands' End spun off from Sears Holdings in April. The company has 251 shops inside Sears locations and 14 standalone stores. And the loser for this week is Lululemon Athletica, ticker symbol LULU. Lululemon shares were shredded Thursday, dropping nearly 16% to $37.25 after its profits fell 60%. The company lowered the high end of its revenue guidance for the year to $1.80 billion. Management turmoil also took its toll. CFO John Curry announced his retirement, and founder Chip Wilson had a confrontation with new board chairman Michael Casey. Lululemon designs, manufactures, and distributes athletic apparel and accessories for healthy lifestyle activities such as yoga, running, and general fitness. Well, those are our winners and losers for this week, and now it's time to check in on the gains that you could have locked in by following the weekly watch list from Robert James and Viral Stocks. All right, that's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earning reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Tuesday is Adobe Systems Incorporated with an EPS forecast of 16 cents compared to 24 cents in the prior year quarter. Last week, Adobe was lauded in a Newsweek poll as the second greenest company in the United States and third greenest in the world. The company has also been ranked number 1 among IT companies both home and abroad. Next up on Wednesday is FedEx Corp with an EPS forecast of $2.36 compared to $2.13 in the prior year quarter. Finally, on Thursday is Smith & Wesson Holding Corp with an EPS forecast of 40 cents compared to 44 cents in the prior year quarter. And now here are 3 Canadian stocks to watch next week. First up on Monday is East Main Resources Inc. with an EPS forecast of break even, identical to the prior year quarter. The Toronto-based miner has allocated $4.2 million for exploration in 2014, including 16,000 meters of diamond drilling and expanding high-grade near-surface resources at its wholly owned gold deposits near James Bay. Also out on Monday is Rifco Inc. with an EPS forecast of 9 cents compared to 7 cents in the prior year quarter. And finally on Thursday is BlackBerry Limited with an EPS forecast for a loss of 25 cents compared to a loss of 13 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel or podcast and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard.